Move further, and we've got Nikhil Ranka CIO Equity Alternatives at Nuvama Asset Management joining in on the show right now. Nikhil, hi, great to have you on the show. Pretty much at the fag end of the earnings season, you've only got Bajaj Auto left now from amongst the big boys at least. Tell me, what's been the count for you for this earnings? What have been the biggest hits and misses?
Good afternoon, Aisha, and thanks for having me on the show. So broadly, if you look at it, Aisha, the earnings season has not panned out that great. On the IT side, we've seen quite a bit of negative surprises because there was uncertainty because of this tariffs, and because of that, as we head into Q1, a lot of decision making has got deferred. And therefore, my sense is IT has seen some downgrades, and over the course of the year, we will continue to see some downgrades in IT on the back. 4 months down the line, we should again have some sort of tariff hike coming through. So this is what I would say on the hits on misses. In terms of the consensus earnings for FY27, 6 8 months back, we were at close to 1380 rupees. If you look at the EPS estimates for FY27, that number is now down to almost 1310 rupees. So close to 5 to 6% earnings downgrade is what we have seen in the last 2 quarters.
All right. Hi, Nikhil. Good afternoon. This is Shrishti also joining in. So you did tell us some of the key takeaways for some of the sectors there. But Nikhil, this particular month we have seen select pockets doing well. But what's the visibility that in the next couple of months, which sectors can actually outperform the rest? Because defense, select railway counters, select counters within the consumption basket has done well in the month of May. But what's the outlook for the next 2 months, given the fact that the monsoon will be in full swing? The earnings season has transpired decently well for ourselves, and even other than that, the noise around the whole tariff uncertainty will also settle somewhat near the mid of next month.
So, good afternoon, Shrishti. My sense is the easy money is already off the table in markets. So, we have seen markets rallying from almost 21,800, 22,000 levels that we hit in Feb end to now back to close to 24,800 levels. So, we've seen a 3,000 points move on Nifty. And if I give the median multiple of 20 times, then probably we are staring at a single digit upside in index over the next 9 months, so to say. So my sense is we will consolidate in this broad range of probably closer to 24,200 on the downside and 25,500 on the higher side. We need to consolidate 2 3 months here. We have to see how earnings pan out for Q1 and Q2 and what commentary we get from management. Because right now what is happening is we are continuously seeing earnings downgrade quarter after quarter. And for markets to gain momentum and re-rate from that 20x levels, we at least need 1 quarter where we again get to double-digit earnings growth and we start to see some sort of upgrades on the market. So the base case clearly is that we will have a markets which will consolidate here for some time. Next 2 3 months could be pretty muted for the markets from here.
Okay, that's the take coming in on the markets right now. In fact, let's just address one pocket in the market, which the street at least seems to be very divided on, because ask any fundamental expert and they say IT is is a sector to completely steer clear of. But on the charts, perhaps that may not be the reading. Jatin, what is your own sense whether IT has reached that oversold territory and one can look to buy some of these stocks selectively?
See, in the case of IT stocks, what we believe is that there was an initial move, but post that we had the consolidation since last couple of weeks. So it's consolidating around that 20-day moving average. So technically, it's a buying opportunity. We believe that in some of the frontline IT stocks as well. Infosys, for that matter, is looking extremely positive from the frontline pack. So if I have to give levels for Infosys, then I'm expecting levels of 1640 to 1650 on the way up, and the crucial support is at around 1550. So risk reward is favorable for going longs in IT at current levels. A decent amount of consolidation has happened on the daily charts, And now we are expecting resumption of the up move in the Nifty IT and IT stocks. So overall, view is positive for IT stocks.
All right, so the view is positive on the IT stocks, but Jatin, can you help us with some names there which are standing out for you?
That Infosys is looking good on the daily charts. It has taken support at the 20-day moving average and is resuming its up move. So on the charts, 1650 is the target area, and the stop loss should be placed at 1550 for Infosys.
All right, so that's the take coming in on the IT space, and Jatin also highlighted a couple of counters to actually watch out for. But on to some of the macro data, all eyes will be on the US GDP data. Along with that, India's data will also be coming in when it comes to the GDP numbers. Now, India economic growth is likely to continue to see an uptick and is seen at 6.8% in the January-March quarter. But what to expect this time around? Let's go across to Varun to find out what's the expectation for the India GDP growth. Varun.
Well, we are expecting the GDP numbers to come at around 6.8% in the Q4 of FY25. Now, if you look at the second half of FY25, it was actually better than the first half of FY25, where in the second half, you have seen good government expenditure and also the rural demand has shown some improvement. Overall, the domestic travel and services export was also good for this second half, and that's the reason we are expecting a good GDP number. In fact, if you look at some of the high frequency indicators, they have actually performed better in the second half of FY25, better than the first half of FY25. Agriculture production, that is expected to be strong, and that is actually supporting the overall rural demand. Although the urban demand has not catched up to that extent. The construction activity, that too is resilient. Also, in the month of April, if you see the overall goods export, that have seen some spike. Now that would reflect in the Q1 FY26 numbers, but overall, if you look, the household consumption, it is likely to remain somewhat range bound, and also the difference between the GVA and GDP will be there, and that will be because of the higher net taxes. So we are expecting good GDP numbers. If you look at the RBI estimates, that was around 6.3. We are expecting it to come at around 6.8%. So let's see, after a beat on the IIP, if we get a beat on GDP numbers as well.
It's not just that Nifty has scaled past that 24,800 mark, it's almost 100 points of jump coming in on that index, while Nifty Bank recovering from the day's lowest point, 150 points of uptick is what we are seeing on the Nifty Bank index, while India Wix continues to slide lower, 9% cut coming in on India Wix, giving charge to all the bulls out there. But in focus will be Bajaj Auto as well on the back of the earnings. The earnings this time is expected to be muted, but the key to watch will be the margins. 20.2% is what we are expecting, given the fact that the currency was quite favorable for the company. The volumes, especially in the export market, has seen a jump of 19% on a YY basis, and along with that, a 3% average selling price hike on a sequential basis is what the company must have witnessed, and all these factors should bode well for Bajaj Auto. So the key to watch will indeed be the margin figure, but along with that, how is the company looking at the revival of their KTM business now? That is something that we will be watching out for. And with this new fiscal, all eyes will be on the commentary, industry growth outlook commentary that company every time comes out with when it comes to the export as well as domestic market. So Bajaj Auto will indeed be in focus, but Jatin, if you can help us with a quick chart check on Bajaj Auto, how do you see the stock at 8,875 rupees?
See, as of now, the chart structure is still positive. Yes, it has run up quite a bit from around 7,600 to 8,800, 9,000 odd levels. So it's a bit overstretched in the recent run up. So there could be some amount of consolidation. On the upside, we are expecting targets of 9,200 on the way up. So those who are holding should continue to hold the stock with a trailing stop loss at 87.80 on the downside, considering there are the results. So I think there could be some amount of volatility. However, as of now, the chart suggests that the uptrend is still intact and it can rally towards 9,200 on the upside.
All right, so that's the day coming in on Bajaj Auto. But Nikhil, give us your sense on the two-wheeler pack as well, because the marriage season is one of the triggers for the two-wheeler companies. And given the fact that it's early monsoon, the rural demand is expected to pick up. Do you believe it's once again time to look at some of the two-wheeler majors which have already corrected 30 to 40%? And what is your pecking order like for the two-wheeler counters?
So, Shushti, if you look at the industry growth per se, on the two-wheeler side, we are still looking at high single digit to very low double digits in that sense for the industry growth outlook. And specifically, if you ask me, names like Bajaj Auto or for that matter, Eicher, are trading at the higher band. So for Bajaj Auto, on an FY27 basis, we are looking at an EPS of close to 380 rupees. And even if we give 25 times multiple to that earnings, we are looking at a fair value of closer to 9,700, 9,800 on Bajaj Auto, which is like a 10% upside from current levels. Eicher, again, if you look at it, the volume numbers have been fairly constant in that 85 to 90,000 per month number for RE. And there also, even if we assign 30 times FY27 earnings, the upside is probably muted at single digit. The only name in the pack which optically looks very cheap is Hero MotoCorp. So there, the stock is trading at closer to 16, 17 times FY27 earnings. But the problem with Hero has been that it has been continuously losing market share. So therefore, till the time we don't see Hero outperforming the industry growth, it is unlikely that Hero will grow and trade above 5,000 levels. So that is something that you have to watch out for. If we see 2-3 months where Hero Moto on a consistent basis starts outperforming the two-wheeler industry, then that is one stock that can prove out to be a dark horse. And the second point we need to keep in mind is, if you look at the commentary from most of the steel players, we've seen close to 2,500-3,000 rupee hike on steel prices because of the safeguard duty coming in. And that is likely to impact margins for a lot of these guys as we head into Q1 and Q2. And so even if we could have close to double digit top line growth, the EBITDA growth will probably be in single digit because of the margin pressure that most of the two-wheelers names will face.
Right, okay, that's the anticipation from the entire motor pack, given that Bajaj Auto is due to declare its numbers today. But let's get some closing ideas also on that note, and some BTST trades, in fact. Kunal, what's your stock list like?
So I'll go with two buy calls. BSE comes back into the buying zone, with a fresh breakout, which you're seeing on the charts today, just about the 2400 mark. So we'll look out for targets in the range of 2490 for BSE. Stop loss now could be trailed higher since the stock has moved up in the last half an hour or so to 2425 or so. And Anantraj is the other stock which looks attractive. The stock is heading towards a classical bullish flag formation breakout. So buy with a target of 585, stop loss at 525.
Jatin, any BTST ideas you may have for our viewers?
Yeah, definitely. So we have one from the banking space, that is Frontline Axis Bank. So it has been consolidating for last couple of weeks. Now today there are signs of revival from the 20-day moving average. So I believe that it can start a fresh leg of up move. So Axis Bank is a long idea at current levels. 1190 is the stop loss level. And on the upside, I'm expecting 1225 in the case of Axis Bank. Another recommendation that we have is from the other stock, which is Paytm. So Paytm is forming a very strong bullish candle on the daily charts. We believe that it is now on the verge of a breakout from a 3 to 4 week kind of a consolidation. So Paytm becomes a buy. 868 should be placed as a stop loss, and we are expecting 895 as a short term target.
All right, so let's watch out for Paytm as well as Axis Bank. Those are the buy calls coming in from Jatin and buy calls coming in from Kunal as well. But the oil and gas space today has been doing very well. Case in point being some of the counters like Oil India, IGL, MGL, they are holding up well. Other than that, chemical plays are doing well. Real estate as a pack. And life insurance too. That theme has been holding up quite well. But Nikhil, I just wanted to have your take. Anything that you're picking up when it comes to the life insurance as a sector? The reason I'm asking is because just after LIC's numbers, we all witnessed the kind of jump up. HDFC Life has been doing well, and even today, SBI Life holding on to good gains.
So, Shushti, if you look at it, over the last 12, 18 months, the sector had underperformed a lot because when tax benefits were taken away from, investments above 5 lakh rupees, there was some slowdown in growth that we have seen for a lot of these companies. And that slow growth is now slowly coming back. We've seen improvement in VNB margins also for a lot of these names. Given the fact that multiples had derated to one standard deviation below mean, there is some buying interest that is starting to come back on these names. And the second part is every time there is a GST meeting around the corner, there are always expectations that these guys can be exempted from GST, which could give some trigger to these companies. So my sense is it's an anticipation of that, which is leading to up move in a lot of these stocks.
All right, so that's the take coming in on the insurance back. Well, of course, the stocks have been doing well, but Kunal, quickly, if you can help us with your take on the insurance counters, HDFC Life you have been tracking, but today SBI Life, anything else?
Yeah, in fact, SBI Life is now also coming very close towards its lifetime high levels. I think that zone, for SBI Life is around the 19, 20, 30 mark for the stock. It's now almost at 18, 20 levels, which means just about 5%, 6% away from its lifetime high level. So this indicates that the discussion which I was having in the morning, that with HDFC Life emerging as the leader, it's adding confidence to the other stocks from the entire pack, which could start to show signs of strength. So we're seeing SBI Life moving up higher. ICICI Pru also, I think if I'm not wrong, is heading towards the 200-day moving average breakout. Of course, much lower than its all-time high levels, but maybe even that stock could make a strong comeback going forward. So HDFC Life remains to be the top favorite from the entire insurance pack, and then SBI Life would probably be the second best candidate in terms of a potential new high breakout over the next few weeks.
Interesting. That's the take coming in on some of these life insurance plays. Today, of course, some of the pharma names are looking okay. Sun Pharma is the one which is actually leading the charts. Just a few days back, Divi's was the one which was the highlight. In fact, Divi's has been one of the strongest pharma names out there in any case. Jatin, on the charts, what's looking like a good pharma trade to you?
Yeah, I believe that the pharma space is coming back into the limelight. In the pharma space, we like Laurus Labs. So on the weekly charts, there was a decline towards the 20-week average, and now slowly it has formed a base and it's starting its next leg of the up move. So Laurus Labs is a preferred pick from the pharma pack. If I have to give levels, then 590 is a very crucial support for Laurus Labs, and on the upside, we am expecting 660 to even 670, which was around the previous all-time high. So I'm expecting a sharp up move in the case of Laurus Labs. So that would be our preferred pick.
Laurus Lab, that's the preferred pick coming in from Jatin within the pharma pack. But yes, of course, Sun Pharma as a counter has been showing a good uptick, a bit of a spike coming in on this particular counter. The markets are holding strong. Nifty Bank just trying to build on to the gains tick by tick. And IndusInd Bank is indeed leading it from the front. But Nikhil, given the fact that for tire companies, we did discuss autos, but for tire companies, the crude prices are coming down. Their raw material basket is expected to show some signs of an improvement, which will rather help their margins. Do you believe any such stock which is like good as an investment bet? Because Balakrishna Industry was one which I remember that post their announcement on the foray into new categories, it wasn't received very well. But along with that, Seat, Apollo, these counters did pretty well post the earnings. What is your take on the tire counters?
So, Shifty, if you look at the names that you have specifically talked, say for example, Apollo Tires, 2-3 positive things have happened. First, if you look at it, rubber is a key raw material, which is almost 60% of the overall raw material basket. And there, if you see the price of chart of rubber prices have fallen by almost 15% in the last 3-4 months. Given that these companies typically carry 2-3 months of inventory, Q2 onwards, we are likely to see margin expansion in these names because the lower cost inventory will start kicking in, and these guys have not taken any price cuts. So that is something positive that will start happening for tire companies from Q2 onwards. And the fact that they have also announced restructuring of European operations, they want to cut down some of the plants which are high cost. That should also lead, in my view, to savings of close to 400 crores per annum. And if you look at valuations, stocks have become pretty reasonable. The valuations are somewhere close to 7-8 times FY27 EV EBITDA. And therefore, from these levels, a 10-15% upside, if rubber prices stay where they are, is very clearly possible in a lot of these names. On the case of Balkrishna specifically, Balkrishna used to trade at a premium to the sectoral average. And given that they are getting more into the commodity business now of PCR tires, that is where the street got a bit worried that competitive intensity will heat up for the incumbents as well. And therefore, we have seen some correction in the prices of Apollo and CEAT as well, given that Balkrishna will enter the space. But my sense is, from a near-term perspective, Q2, Q3 should be very good for the tire company.
Right. Right. Okay, Nikhil, Jatin, Kunal, all of you, thank you so much for taking the time out and joining us today on the show. And let's wind up for the day. I'm going to hand it over to Snehi for the closing trade.
Well, yes, let's take a look at how today's trading session has